David here, weekly wheat report. This is video going out to 21st of December, before Christmas, 11:18 in the afternoon PM. What I'm trying to do is a yearly review and try and look forward and put some numbers where we are at the present moment. Using a new chart and software package. This is the monthly chart in front of us for the last 5 years. We can identify here just purely on price action that we came down in 2013, went sideways end of 2013, 2014. You can see this here when moving mouse at. Then we came down in end of 2014, hit a low of 104. We then went sideways during 2016 and then 2015. Then 2016 we went up, hit a high just under 150, and since then, since harvest time, we've been pulling back. And this is on the January contract. We're trading at the moment live 138.30. So let's put some numbers on and see what we can ascertain. Now, at the moment, I'm going to give you the look of a downwards move and a downwards argument. This move is going to keep on. I'm putting a move here in place of an ABC correction move. We've got A, B, and C target down here. Now, I've arrived at this bottom target here with using a Fibonacci. Now, let's put that in place. So from this move down here, if you then cast this forward, I've got a forward projection of a low coming in at 103.40, which would give us a C. This took place on the 9th of September 14. Sorry for the dog, I just let the dog out. And we can see that it didn't quite reach the projection target of 103. So is this move still in place, and is this a bounce in a downward trend? If that's the case, then we would have to break through A, which comes in at 149.25. So let's call that 150. So at the moment, you'd be looking to say it has rejected this this year in May and again in July, failed to break through it, and we're heading back down. And obviously then the first target down would be 129, 118, and the low target ultimately, if we're seeing a down year in 2018, would be down here to go and test this 103.40, which we haven't seen yet. So then if you reverse that, if I just take those off, so take that off, and I'll take the hang on, get used to this a bit. Take that off, the down move. Now let's go for the bullish argument, and I'll do an Elliott wave projection of where we are at the moment. So if I put my Elliott wave on at the moment, I can see a 1 move, a 2 retracement, and this is a 3 wave. You're then looking for a 4, and then up to a 5 here, 165. So the 4 would come in at 129. So this is our bullish argument. So what we're saying is this downward move is over. We're now in a fresh move up, fresh 4 to 5 year cycle, and that is our target, 165. So we've already completed these. Let's put some Fibonacci on there, and then put a retracement in. We can see that the first retracement, 134, this was broken. That was broken in December of 2016. Since then we've climbed up. We didn't quite break through the 38%, 151.75, and obviously we didn't hold the 150, and we've come back. But this is okay. It doesn't negate this up move. I've got a target figure for a retracement back down to 128. So you can see at the moment we've got a bearish and a bullish argument. Now let's put on, we have got a level that we've identified here. I'll just put on some price levels. Where's my price level? I've got a price level coming here of 138. Now that would come in, sorry, I've got that as text. That's text come through. Let's get a price level, horizontal level. Here we go. And that comes in at 140. 140. Now you can see how important this 140 is. It held in 2011. It was resistance in 2014. We broke through it, and this is what gave us this spurge up to 151. And at the moment, obviously, you can see we're tiptoeing either side. 140 has not been to the upside at the present moment. So we've identified that as a key level that the market will have to hold, or quickly, as we get into the year, regain to go above. Now let's put on moving average. Now I'll identify this over looking back over the last 20 years, that 60 moving average on a monthly is a key level. Now you can see here that in 2014 it broke through it, and then obviously we had this big fall down here. At the moment we've seen a break above it. We didn't close above it, but we have quickly come back. So it's a test of the 60 SMA. So on the upside, we'd like to see it break through 140 and then go through the 60 SMA, and then that would open the upside to 179. Let's put some price levels on there at the moment. Text. Price levels there. Identify the key levels. I'll just put them on there at the present moment. So you see 140 here, 140 there, see 150, and this is my key support level down here. I'd like to see held at 129. So where can we start to put a plan together that we can identify to keep an eye on next year? Well, I'm going to use a risk-reward ratio here. I'll just put this on here. So if at the moment you've got wheat to sell and the price 138, you've got a possible downside of £8 a tonne down here, and that would bring you down to 129. But on the upside, you've got potential, if we're looking at this Elliott wave coming to fruition and we broke on the down cycle, of a possible £26 a tonne move to our first target, 165. So for old crop, I would say that possibly you're at a level where there's possibly not much upside or downside till the end of the year, could go sideways. New crop, if we're following this Elliott wave projection up, then you're only £8 away from the bottom resistance support at the present moment, and potentially there is still more upside at the present moment. So let's end here by putting on the total spread of where we see. This is going to get very confusing, but so put that on and give my, here we go, lost that, give that back, here we go. So basically this ends up with a bit complicated now, so you just have to bear with me. So we can see our down move here, A, B, C. You could see where I've come to this 127, because this is our first projection of this negative move down here, and that would want to be held. If on a closing basis that breaks, then obviously I think we open the gates down to 118 and 103. So at the moment, what we got? We've got a downwards yearly trend and a bounce up to go and test 38% retracement of this whole move down. So at the moment it's undecisive, but there is potential still, I see, for a move upwards of possibly £26 a tonne, but your risk is a further move down to £8. So what we'll do is use this as a template and build beginning of next year. The key, first of all, would be a recovery back over a closing month level back over the 140. If we get in January and we don't fail that and we close somewhere 139, somewhere similar 138, and unfortunately that gives us more time confirmation that we are not going to break that level, and we could see a move back down to 129. So this is my ideas. Sorry, it's a bit complicated. but obviously we'll try and keep an eye on that as we go forward. Thank you very much, and Happy New Year.